Right, let's move on. Talk about a company here. Talking about Oxford Industries. And I just think of shoes, but it's not. You said this is Tommy Bahama and some company, Pink Lily or something.
Lily Pulitzer.
Okay, I
And
know
that's
it.
how I'm going to pronounce it. The other funny thing I always forget about, have you ever eaten at a Tommy Bahama
I
restaurant?
do. I like that. Yeah.
Yeah, it is actually, it looks like it's owned and operated by Oxford Industries.
Oh, really?
I wonder how many they do have around the country. But
I know we go to the one in Fashion Valley, and it's just great. You do your shopping, and it's kind of like a sidewalk cafe. You know, it's cool.
I think I went to the one in Palm Desert, but that's the only one I've been to.
Okay. Well, let's look at the numbers before we run out of time. Whoa. Well, I say because I just realized they're in the industry of apparel manufacturing. The short on this is 23.9%. There's something going on with this company that's not good. We do not see any earnings, no PE ratio. The industry is at 22.6. Price of sales looks inexpensive at 0.4 versus 1.3. Price of book value looks good, 1 versus 3.3. And price of cash flow also looking good, 3.4 versus 12.3. And the PEG ratio, 0.8 versus 9.9. So some good things here, but I'm worried about the lack of earnings. Also, too, we see over the last 5 years, no earnings growth for the company. Industry is up 20.3% for the 1 year. Also, too, sales down 2.4% year over year. The industry up 10.5%. Now, the analysts do give Oxford, I'm going to say Tommy Bahama, a good 5-year growth rate of 16.6%, almost 4 times the industry at 4.2%. Wow, they do pay a dividend here, and this is shocking. 7.6% payout ratio is nothing there because they're losing money. So you got to be cautious on trying to get that 7.6. That dividend could be cut. I'm going to say probably likely will be cut. The payout ratio on free cash flow is about 164%. We do see on the balance sheet, let's take a look at that. Current ratio 1.3 versus 1.8. That's okay. Debt to equity 1.1. That's the same as the industry, so I'm okay with that. Look at the net profits margin, again, minus 0.2%. So they're not making a profit after everything they do. And those shirts, I know, they're not cheap. They get quite a bit for them. The industry is at 5.8. Return on equity also a negative 0.5%. Industry at 24. Free cash flow is only 26. I believe that's $1 million versus $767 million for the industry. I hope we got some good news going forward because I was hoping I could buy this and because I spend so much money buying those shirts.
Well, looking at Oxford Industries, again, their ticker symbol is OXM. It's $36.32 is that current price, 52-week range. Wow, the low, $30.57. And I say wow because the high, $89.86. Year to date, the stock is down over 50%. Looking over the last 1 year, down 55, 5 years down 41%, 10 years down 42%. So, I mean, this has not been a good performer. And I was kind of blown away by this, the market cap on this business, $552 million.
Why are you blown away by that? Thought it'd be higher?
I thought it'd be higher. I mean, Tommy Bahama is a pretty well-known brand. I mean,
Yeah.
I thought it'd be at least $1 billion.
That's a
I
retailer.
mean, it was
Specialty retailer.
Yeah, I mean, it was over $1 billion, but the stock's come down so much. But, you know, you look forward for Tommy Bahama. You go out to January 2027. I'm going to say it's not bad news here. Estimated earnings per share is $2.66. It does give you a target sell price of $44.16. Does trade just around about 14 times those future earnings. And I do wonder how impactful tariffs have been on this business because this year, its estimated earnings will fall 66%. So I'm wondering, you know, is that a function of the tariffs? Because sales are only estimated to be down about 2%. So that had to be a cost of goods issue rather than a massive sales decline.
Yeah, my wonder was, you know, how much is from China? Because that's been a big thing that's really hurt a lot of them. And also to see the range of the estimate of 266, a low of 192, a high of 306, and also 90 days ago, the estimate was $3.60. So that tells me maybe it's not tariff related because the tariff's been around since what, April? Yeah. So something's happened over the last. That's a decline of $1. That's a third.
Well, they did come out. They had weak guidance in the most recent quarter. It caused the stock to fall 22% after reporting earnings. They're looking for guidance this full year to be $2.20 to $2.40. Analysts were looking for $2.90. So that's why the expectations have come down so much.
Maybe the shirts are on sale. I'm going to rent them all and get one. All right.